everyone, this is Rob Roy and welcome to the Elliott Options U.S. Market Update. Happy New Year everybody and welcome to the year of clarity. Get it? 2020, clarity. Anyway, the market's certainly given us plenty of things to look at over the last couple of days. I did a recording not long ago saying if you're long the market, are you feeling stressed? Well, just in the last couple of days, we had a very poor ISM report. We had the killing of that Iranian general, and we have the market at an Elliott wave resistance level. So if you weren't feeling a little bit nervous then, you might be now. Let's take a look at the charts and I'll show you what I mean. So in the intro, I mentioned that there are a few things going on in the market that might make you a bit uneasy if you're long the market. So let's take a look at what I'm talking about. First of all, I said that we were nearing a Elliott wave Fibonacci level, and we are. We're right here at the 100% extension of the wave 5, which means basically the wave 5 is as long as the wave 3. Normally the wave 3 is the longest leg, except when you get an extended wave 5. Well, now they're the same length. So we've had a very long expansion, which I'm sure everybody's well aware of, covered in the financial markets. So that's a point of resistance. Now, one thing you can hang your hat on if you are long is in this zigzag pattern that we've been talking about for quite a while. With our Elliott wave patterns, we have not reached the extended C wave, but remember, this is the extended level. It's not the first level that Elliott wave is supposed to hit. The first target level has already been reached. That was the 100%. And if you've been listening to the recordings, you know that I've been a little suspect of the 78.6% fib level holding. So far it has. But I still think that it bears watching. So if you are long, as I mentioned, we have the potential to reach that 161.8% extended C wave. Now, another thing to be concerned about is a little bit of volatility that's occurred here with these larger daily bars. Another rule in the world of trading is that volatility marks market tops and market bottoms. So when you see these bigger bars like this, you know that there's been larger intraday volatility. And all we have to do is go take a look at the VIX, and you can see that we have had some big bars as far as volatility from the market with what's going on intraday. Now, we certainly had enough things to concern ourselves with, haven't we? With the fact that we had that Iranian general that was killed, and then we also had a very poor ISM report on Friday, which I wanted to show you this. Here's the ISM report. Now, this one's in manufacturing, too. And so the economy, one of the things that we've been hanging our hat on is the economy has been very good for a very long time, but it is showing signs of weakness. And don't forget, talked about this quite often, we did have that inversion in the yield curve. And everybody's been saying, oh, it's different this time. And it's just been my experience over 20 years when everybody says, oh, it's different this time. It's usually not different this time. So I think we need to keep an eye on that 11 or 12 months down the road of the potential of a recession. And now we've had 4 months in a row where the ISM manufacturing report has been below 50. Anything 50 above represents expansion. Anything 50 or low represents contraction. So that means that manufacturing has been contracting. Now, inside the manufacturing report is autos and airplanes. And Boeing's issues and then some residual effects from the GM strike made that number, it came in around 47, just give or take a few percentage points here or there. And if you throw out Boeing and the auto sector, GM specifically, that gets us right back to about 50, but still not a sign of growth or expansion, maybe not as bad as the number looks at first blush. But you can see here that we've had those months where we've been contracting. So again, something to keep an eye on. Another thing, as I wanted to remind people, as I've been mentioning this towards the end of the year, is investment managers that have been long the market, those that have participated in the market move to the upside, are just waiting for an excuse to sell. Now, it looked like they had it on Friday morning, didn't it? When we had that reports of what had happened with the Iranian general overnight, and the market opened big to the downside. The futures were down big, and the market came back and closed well off the lows to finish the day. The volatility was still there. And taking a look at interest rates, as you would expect, money did move into the bond market on Friday. So money moving into safe havens, if you will. So there was a big jump down in interest rates. So even though the equities markets did recover quite a bit, there's still a lot of money that moved from equities into bonds. We'll see if it's just parked there over the weekend or if it stays there and this becomes a trend moving into the rest of the week. The dollar is on its way down. It's in a wave 5 pattern, and you can see clearly here that we've had these levels of lower highs. It's a kind of a in-between one, right? It's a dichotomy type of thing with the dollar. We want the weaker dollar because that makes international companies, multinational companies have a better exchange rate, helps their profits. But then we don't want the dollar to be too weak because that does show economic weakness. So we kind of want it in that sweet spot, and we really don't want to see it go much lower than this, or it will be moving more into that area of economic weakness. So awful lot of things to think about as we just start this brand new year. But the main thing is that I'm watching is this volatility and to see if this will continue. Obviously, there's going to be a lot of unease to see if Iran does retaliate. And if they do, what does that look like? What's our retaliation going to be? We've already warned them not to, or we will stand ready to use even more force than what's been used already. So just an awful lot of things to be concerned about. If you're long the market, we've balanced things out a bit, have some downside positions ready to go, and just think that caution is the word to be focused on at this point at the beginning of the year of clarity 2020. Hope you've had a great start to your year. Give us a like, hit the subscribe button. We'll talk to you again soon. Take care, everybody.